Hey, what's up? With the Yeet, I'm trying to focus a little bit more on simplifying concepts, kind of walking through things, and then mapping it out both so that we can use in the future, so we also plan for the day and the next day, and also just so you guys can learn it and I can do it kind of more, let's say, haphazardly presented. Here today was really just about this was as simple as it gets, right? What I'd been saying. So if I go to the screen that I've been using for right now we're in D plus is doing our theme is like training camp football. So I drew this like on the green background, right? Of course, it's not there now, but anyway, I had these nifty little arrows, kind of saying like, right, what could happen with the day. So I'll just go ahead and put those here. So for today, right, we had said what? We had said there were two options. Either a breakout of the trend is climbing up in this trend as of yesterday, right? A breakout of this trend at the level, this key level here. And these are just monthly levels, not like magic levels. Or conversely, we would see a breakthrough and a breakout, right? There were some more nuances to it, but that's pretty much the simplified version of what we were seeing. So when I wake up this morning, right, at like 6 or whatever, what I see is a break of the trend, right? Now I got all these stupid arrows drawing everywhere I go. Okay, what I see is a break of the trend here. Like, this is just really, really simple stuff it was today. We see a break of a trend there. And then we see it fail, right? This is on the open now because we're at 5 a.m., that 5 a.m., 6 a.m. hour. So we see right before open, now this was the real gift. They break the trend. They fail the retest basically there, but even if you take that out, then they reject the level on a wick red candle, right? So now we've got a loss of the trend, followed by a failure to claim the level. So we know what's coming next, right? We know the downside movement's coming next. We know the 5311 is valid. So now it's a matter of, okay, where am I going to go to? So this was the first play of the day. This was on Yeet Plus. This wasn't on the main Twitter. This was like 65%, I think. But it was on we got 813s expiring tomorrow. So I know that we're going down. I take it off the open, and I add a day. I don't get a zero in case they do what? They do a squeeze candle up on a false breakout and then bring it down. But we know by the laws of rejection, this has to come down. So we get in the puts. On these plays, you might be wondering, okay, you're looking at ES. You're not going to play it all the way to the monthly, right, on a day trade. How do you know to get out? And so then there's two ways. The first way is I also have my weekly levels here. So here I was able to see at like 6 in the morning, right? A fine target would have been, this yellow one isn't even a level. I don't know why I have it there, right? So what's your target? Your target's technically 53.60, right? On that long candle coming down. And then your next target's 53.49. Those are weeklies. These red ones are monthlies. Another way you could do that is you could also play it on SPY. Looking at SPY levels and SPY structure. Right? So it's the same kind of concept here. 5 in the morning is where? Right there, right? 6 in the morning we get the rejection. It goes down to the next monthly level there, right? So that's how you know when you're going to get out. But if I'm swinging, I'm in it for the long haul to the downside. That's what our flow plays are. We're in bearish flow plays right now. So that was trade one. The second trade, right? Just the easy trend rejection. Or trend falls out the trend, rejects a trend, rejects a level, play the downside, get out at the next weekly level. Textbook, right? Easy. The next one was a little bit trickier. And here's why. Stupid thing won't delete. Okay. Next one's trickier, and here's why. So now I'm just chilling, right? I'm waiting to see what they're going to do. I see that ES has found support at the weekly, and I'm just watching this giant whole candle go up. And why am I watching it calmly? Because I know that whatever they do here doesn't matter because they've lost that level. They rejected it twice on ES. That level's gone, right? So all this is theatrics. That's just them doing a like a liquidity grab back test candle. Get some stops. So when I see this candle go up, I'm just sitting there watching, chilling, seeing how high they're going to take this thing with not a care in the world. And then I see them cross it, and then the next hour, right? Let me go back to my simpler one. And then the next hour, it closes just beneath, right? Just enough to confirm. And once they close beneath what? I know that we're doing what again? I know that we're going down. Right, so play the same thing again. What do? We got the puts. We played them to 53, 60, 25. We picked up 170% on those because I got zeros on those. And the reason I got 0 days on those is because I know that once they reject it twice, they're not going to be as nice about it. Now, another key thing, though, that really let me have confidence as well, which I want to show you guys, is that I just used the market tide to go with it, right? So I'm going to show you the exact moment where I knew. So that candle we're looking at was at 9 a.m., right? This is the activity 9 a.m. You can see into the 9 a.m. hour. This is the one that closed, right? Remember, that candle, right? This is our 9 a.m. candle, right? This is the one that rejects. This is our candle right before 9 a.m. So we're watching this into the 9 a.m. candle, this one, right? We're watching this one like 8:55. This all gets bought up, and we're worried about what's going to happen on this one, the next candle. I look, we're getting into 9 a.m. I noticed the put premium's been creeping while the price is rising. Put premium's creeping. And then right when we hit like 8:55 going into 9, you see this nosedive into 9. So what do we know? Even though the price is flagging, when we see that call premium going down, we know that they're now going to respect what we're talking about, right? That they're now going to respect, not going to respect. They're now going to respect what we're talking about. Call premium is tanking, put premium is rising. We're in the puts because we're following the market tide and we're following the trade. And now kind of giving a little bit of credence to my theory, you can see the put premium increasing even though the price is, somewhat flattening out here. We see the put premium increasing, and that coincides with what? Our theory, right? That this upside level is done for now. And then we're going down to 53.11. The only thing that could stop that is PPIs tomorrow. So like there could be a fluke candle to the upside, which, shit happens. But take PPI out, events, volatility, all that. The price action says this level's been firmly rejected, and we're going back down to retest 53.11. So that's how we got out of today with a couple big wins. All right, cool. Later.